Hey guys, this is Garrett from Twin City Accounting. Welcome to my first real video in the Bookkeeping Basics series. What is bookkeeping and why is it important? As I discussed in the introduction last week, this series is designed to help business owners do their own bookkeeping. Now, my sincere hope for each of you is that your business grows to the point where it is no longer feasible to do it yourself. But until that happens, these videos will help bridge the gap. Let's go ahead and get started with the first half of this topic. What is bookkeeping? Bookkeeping is essentially like keeping a detailed diary of all the money your business earns or spends. Every time you buy lemons or sell a cup of lemonade, it needs to be written down in the diary. At the end of the month, you'll add up all the earnings and expenses and arrive at your profit. If you did a good job, the diary will balance with what you have in the bank. Now, unfortunately, real life is not as simple as a lemonade stand. We have to turn in those lemons for credit cards and trade out our lemonade for invoices and contracts. But we still have to keep writing everything down in the diary. This process can be broken down into 3 manageable steps. Step 1, record every transaction in the diary. Every receipt, Amazon order, credit card purchase has to be entered. Same for Etsy sales, check deposits, cash payments, all of that. Anytime money comes in or out of your possession, it needs to be entered into the diary. This doesn't have to be done every day, but no more than once a month. Really, every week is probably a good middle ground, but it really depends on the number of transactions your business has. Step 2, categorize each transaction. Now that all the transactions have been entered into the diary, we need to give some more detail to transform that data into something meaningful. This means using what's called a chart of accounts to add labels and group transactions into similar categories. But let's not get ahead of ourselves. That's a topic that deserves its own video, so we will go into more depth on that topic in the future. Let's move on to step 3, reconcile the diary to the bank. As I said earlier, if we did a good job, our diary will match the bank. What if it doesn't? Reconciling means going through them side by side and comparing the records. If we find a transaction that isn't in the diary, then we need to record it. This step is probably the most important part of bookkeeping. Mistakes here can lead to very expensive accountant bills, especially if you let your records get several months or even years behind. Now again, Step 2 and Step 3 are both important enough to deserve their own video, and we will go into much more detail on that over the next couple of weeks. Once all these steps are done, we can print a nice and neat financial report that will give all the information on how we did for the month. That is bookkeeping in a nutshell. Now, why is it so important? First of all, this process shows us if we're really making money. When there's a lot of money coming in and out of your bank, it can be hard to tell at a glance if you're really making money. If you have multiple services or products, you will find that some are profitable and others aren't. When your books are up to date, you can see the profits and the expenses tied to each product, and that gives you the information necessary to make business decisions. You may find that service A is costing $500 a month, and you're only making $300 a month. Well, if that's the case, it makes sense to stop offering that service. Maybe service B is providing $2,000 a month and costing you $1,000, and that's covering the expense of service A, but we need to let it go. Okay, reason number 2 is taxes, everybody's favorite. The IRS wants its cut, and they're gonna get it. With updated bookkeeping, you'll be able to confidently determine your tax liability and pay that number without fear of audits and penalties. If you take away one lesson from this series, let it be this: do not play with the IRS. You don't want to find yourself in trouble with them because it is both very expensive and stressful. Now on to 3. Are you ready to take your lemonade stand to the next level and open up a lemonade shop? Well, if you want a bank loan, you'll have to provide clean records and prove you have the ability to repay a loan. The same goes for selling your business. If you want to ride off in the sunset and retire to Hawaii, the buyer's going to want proof of value of what they're buying. they're not going to pay $1 million for your business just because you say that's what it's worth. They're going to need paper copies proving that you're making this kind of money with these services for these prices. They're going to want all that information. And that's why, in a nutshell, bookkeeping is important. If you find yourself overwhelmed by these concepts and think doing your own bookkeeping may not be for you after all, well, don't hesitate to give me a call at 318-581-1744 or just send me a message. If you're still hanging in there, great. I hope you'll be back again for next week's video, this time next week. Until then, hope you have a great day, and I'll see you next time.